2013 is the year to determine whether a business is large or small. And you can go back and look at the glossary, but large is 50 full-time equivalent employees, full-timer employees plus part-time hours divided by 120. And if that exceeds 50 full-time equivalent employees, you will be subject to the employer mandate in the year 2014. So 2013 is the year to determine whether you are large or small. 2013 is also the year to determine whether employees are full-time. So you can either use the monthly determination of average hours, or you can use that look-back period of 3 to 12 months over the year to determine whether employees are full-time. Beginning in March of 2013, employers will have to provide new employees with a notice of exchange availability. This will just be a document that says, look, the exchanges exist. Here is where you can find them. Here is what they offer, and here is some contact information. This document doesn't exist right now, and I imagine the federal government will have to come up with some sort of template to follow. But just like how employers had to distribute during this previous open enrollment season this summary of benefits and coverage document, they'll have to distribute this notice of exchange availability as well. It'll just be a piece of paper. As I said, in this previous year and then continuing into this year, during open enrollment, employees will have to be provided with a summary of benefits and coverage, or the SBC document. There will be, just like this previous year, there will be the responsibility if insurance company exceeds this medical loss ratio, they will send the employer a check. That employer can then either distribute that money to employees in individual checks or use that money towards premium rebates when they re-up for the new open enrollment period.
And if it's distributing to employees, that may very well mean locating former employees who worked for you a year ago and chasing them down and getting checks to them as well, which is one of the more complicated features.
Finally, if an employer files more than 250 W-2s, so this is even larger than the large definition within the law, they must disclose health insurance costs, both the employee and the employer contributions, on the employee's W-2 forms. And as far as taxes go, this is the year of an increased Medicare surtax and a new investment tax. This new investment tax is not a real estate tax. It's been widely circulated, but it is a tax on investment income or unearned income. These taxes only apply to individuals who earn over $200,000 or families that earn over $250,000, and they could impact businesses that file at the individual level that exceed these amounts. There is a $2,500 cap on FSA contributions. Previously, those were at the disclosure of employers, or those were at the decision was left to employers. The threshold for medical expense deductibility increases to 10% from 7.5%. Finally, a tax on medical devices will begin in 2013 as well. So that's just kind of a year of planning and preparation